The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 31 January 2025. Well, the first month goes by. And I'm going to start off on our landing page as usual, just pointing out that you should be on our free email list. There are things there that we mail directly you usually won't get even on the blog, which of course is free, lots of information. I just finished an interview with Citizens for Sound Money, the Sound Money Movement. I'm actually on the board of directors with many others that are of like mind, and that will be up on the blog here probably next week. Also just finished the February edition of the Morgan Report, and we went into a lot of what's going on with the new administration and what it means for bonds, the stock market, AI, jobs, geopolitical tensions, gold, silver, and then we went deeper into the tariff situation that purportedly will take place February 1st, which is tomorrow, and a lot has happened in the precious metals, as you're probably well aware. So in this month's report, we go through a lot of things and dive deep, as I said, on the tariff situation and some things behind the tariff situation, which probably very few in the precious metals community are aware of. We did report that. I'm going to save that for our members. It's nothing really super top secret, but it's something that has been in place for certain countries. As most of you know, and I've talked about many times, buying silver in North America, you're really at an advantage because in almost all of Europe, the UK, and many other jurisdictions, there's a pretty heavy VAT, value added tax, that you have to pay if you want to buy physical silver in those countries, which doesn't really exist in North America, Canada, or the United States. However, with this tariff situation, it's adding to complexity. So I'm on our Twitter feed. This is from the Happy Hawaiian. He's talking about gold hitting fresh 5,000-year high right now. Well, in nominal terms, my friend, but really in inflation-adjusted terms, it isn't a new high. So I'm not going to argue with him. It's the biggest number we've seen in U.S. dollars. Only the dollar of today is not equal to the dollar of 50 years ago, but regardless, we're hitting new highs nominally. Bob Coleman's pointing out that J.P. Morgan plans $4 billion in gold deliveries in the U.S. under the tariff fears, and there's more to it now. It started, I think, with the tariffs and bullion dealers fearing that they'd have to pay maybe 25% to ship gold and silver in the United States. Massive amounts have been leaving London, the LBMA, coming across the pond and moving into the United States. However, it seems to be there's more demand than there is gold available. And I think what started as a fear of a tariff turned into a fear of availability. So it's my contention and others that as this took place and more bullion banks, hedge funds, owners of gold were basically repatriating their gold because they found it was going to be a 1 month and now reportedly up to maybe 2 months to get your metal. Well, that causes a little fear in the market. Is it there or is it not? And I want my gold too. So we've had what we might call, in quotation marks, a bit of a run on gold. We'll see how it happens. We're going to see the resolution of whether these tariffs are really implemented on Monday. We should anyway, because purportedly they take place on the 1st of February. So we're going to see some interesting things next week. If they really take place, we may see more angst in the market. And if they're not going to take place or at a different level, or perhaps going to be implemented not on gold and silver, because it isn't really clear what will take place in the market. So hold tight for an update on that. I like what Steve posted here from the SRS Rocco report showing the production of silver from 2015. It was either he or someone else. I think it was actually Metals Focus, but regardless, facts are facts. One of them or both of them reported that really we've been flat to down in overall silver production since about 2015. And that's for a couple of reasons, mostly grade degradation. The average grade coming out at the head of the mill in most cases, not every case, has been reduced. And you have reduced grade, you can run through the same amount of mass, the same amount of material, but you come out with less product because there's less silver per given ton. And that's the case. There's an article written this week, I think, again, it was Metals Focus, about how have we hit peak silver? And they were, in that article, I think it was Metals Focus, saying that they thought the peak silver was ahead of us. I'm not so sure. It's hard to determine. I did I think last week's perspective on some of that. James Anderson always puts up some good work here. What might be considered going into the eligible categories, what I wrote, because what's happening here is a lot of this gold flow that's coming across the pond is going to the eligible category, which means it's not available to the dealers to sell. So if there's a dealer X that's in the US, for example, and dealer Y owes them the metal, and they have to get it into the registered category to do so, but instead they place it into the eligible category because somebody already owns it, and they're jumping up and down saying, it's my metal, prove it to me, show it to me, give me the medallion, give me the proof of it. They wouldn't be able to move it in the registered category. I hope I'm not going over anyone's head here. I'm just trying to explain that things are getting, it seems to be tight and tighter if you understand the difference between the eligible and registered categories. So I thought I'd point that out. And I won't go on and on. I'm going to try to keep this short. I try to keep these under 10 minutes. I think I'll finish with a couple here that, according to Chris Marcus, London market players are racing to borrow gold from central banks with store bullion in London following the surge in gold deliveries in the United States on speculation of potential import tariffs, two sources familiar with the matter said. And the last part of that is the U.S. gold market has been trading at a premium to the London market since the U.S. presidential election result in late 2024. This happens from time to time in the markets around the world, LBMA said. So I think I'll leave it there. Interesting week ahead. The new report is published, so premium members, look for that to be in your email box here, probably tomorrow, Saturday, the 1st of February. I took a couple of really good questions, lots of stuff about silver, gold, the economy, the future, and a little bit of a treat, I think, at the end on my final thoughts relative to how we can give back. So I'll sign it off there. This is David Morgan of themorganreport.com.